Oh, I forgot to turn on my camera. There we go. Oh man, look how bad this is. Oof. Just like all kinds of bad. Desktop's better. This is very much so a desktop focused app though. At least at the moment. So what I want to do now is I want to try and fix. I'm going to try and fix the when you paste a link into like Discord, that it actually does the right thing here. HTML. What would that be called? What would it be called? It would be something. Give me a sec here. I'm just trying to think. HTML. Discord. Bad. Sort of. Embed. What is this called? No, this isn't what I wanted. Trying to think of what it would be and just not having any idea right now. So like when you post something into Discord and it shows up with the little like thing or whatnot like this. So like let's go. Wait. Damn it. I have to change the name? Oh man. Oh my god. Alright, we'll come back to it. It won't be difficult to change the name. Let's see, what was it? I want to say that it's here. Twitter card. I guess it's the card thing. Discord card. Is it meta content? Oh, it's this one right here. So in this case, I want to change the description based off of whatnot. Change. Sorry, React change meta tag data. Data from the server into the page. Cool, not what I want. Used. I don't want to use a plugin for this. It's either going to be. Oh my god. Okay, so it's just this stuff here. Alright, whatever. Okay, so if we go to securities here, we just have to do this. This, and then it will be document dot title equals so we've got a wait, that's 2? Oh, so it is. And then this one's also 2. Okay. Okay, so inspect console document dot title dot split. Did this work? Nope. No, I know. If we change this to be spaces instead of these here. That's not really what I want either. JavaScript string. Can we slice starting at a certain point? Like, sort of? Fuck it. Alright, and this would be profile must be mini name document dot title Apple Inc. data. Sure. And then here we would have description. Beautiful. Oh wait, no, that doesn't make sense either. Stock data for JSON.data.profile.company name. Stock data for historical. I didn't spell historical correctly, I don't think. No, I did. Never mind. What's the next one? JavaScript meta tag change. Okay, so here we're looking at, what was it? It was not jQuery, but whatever. Let's see. Will Google respect changes? Cool. How to change a page title and metadata dynamically. Of course they're using that. Okay, so it's super annoying. Document dot get meta. Get element by get elements by name, I suppose. No, by property. JavaScript get meta tag properties. Oh, okay, so like I actually have to search for it like this. Oh wow, JavaScript. Terrible every time you turn around. It's like, don't worry, it's, oh, it's just annoying is all. But of course it's annoying. I'm talking about JavaScript here. It's the title, I think, that I want. So I get this, then I have to do a loop over it, I think. Meta tags dot 0. Nope. 1, 2, 3. Is that one that I was looking for? No, it's org description, right? Actually, no, that is one that I want. Dot name. Better way to search name from loop to avoid using index. Just say I'm actually going to do that. It's just more, you know. This just gives me the template to start from. Const description equals description. And then here we would do for let I equals 0. See here, this would be tags equals const tags will be the document dot get elements by tag name, meta const tags length equals tags dot length. I is less than tags length, and then I plus plus. This would actually be faster if we went like this, and then is greater than tags length, and then we do minus minus. Sorry, I is greater than 0. It's greater than or equal to 0. And we start with minus 1. Then here we would do if tags I dot name equals clean code. Sup, welcome back. It's been a while. What was the one that I description, right? To do tags I dot name equals description. I think this will work. I don't even know how to check this, to be honest. Would it be here? Like, will this actually be affected? Oh wait, no, it's not name I want. I'm an idiot. Dot. would it be inner HTML equals testing? I don't know that this will actually work, to be honest. Oh, it did. There we go. Oh, it's content. It's content that I want. There we go. Yeah. Here. Continue. If actually, I guess this actually could be a switch statement. Switch. Why are you coding JS raw, you madman? He's not a madman. He is a mad lad. What do you mean coding JS raw? I'm not coding JS raw. Meta could be changed in an array, then it will get messy. I'm not sure what you mean by that, Texas. Wait, why would you have to... Why wouldn't you just do tags.filter? Switch. Tags I.name. Description. Oh, it's not an array? Weird. JavaScript. It's just weird. I can't remember how to do a switch statement in JavaScript. JavaScripts. Oh, it's case. That's what it was. Are you gonna keep your code? Oh yeah, there we go. Morning, sorry it's been a while since I stopped in. It's all good. Fortune Nerd, it's been a while since I took a pretty long I took a pretty long break from streaming, so that's better. Why is this complaining? What? Sign expression type string is not assignable to type document dot description. Interesting. It's like, it works, but go away. Oh, it's... Wait. Document.description, right? Document.title is one. but description is not. Right. Here we go. There we go. I'd use forward loop. Because most of the time it's going to be Chrome, and V8 engine. The V8 engine iterates faster backwards than forwards over a list. It's weird, I know. But yes, sudo head is backwards. Well, I am programming in JavaScript right now. Premature optimization. Yeah, pretty much. Come on, man. Get on my level. It's so bad. It's not even name that I want for all of these, is it? For most of them, it's property. Damn it. So switch statement doesn't make any sense for this. Great. If it's like different for each one, which is just dandy, just absolutely dandy. All right, there we go. Okay, so that takes care of that one, and then this would be a continue then, so it doesn't go any further. And then in this case, it'd be if. I think the rest of them are all property. Like the other two are properties, right? I mostly just like, I don't know. It's yeah. Tags I dot property is equal to org title. I think this should work. Tags I dot content equals description. I'm going to collapse this afterwards, just FYI. That will be a thing I will do. I just want to see if it will work. And then after it works, I'll collapse it. It doesn't work. These ones don't change. Wait, is it not seeing them? Is that why? Console.log testing. Yeah, it's not seeing it at all. Interesting. What if I do console.log tags I.property? Undefined 7 times. Interesting. Huh. Would it be name? No. Content works, but like, I don't want to match on the content. I want to update that specific property. But I do agree. I think I'm gonna actually switch this back to a forward loop. It's just easier to reason about. It's less than tags length. Undefined 7 times. Okay, so this is the one of the ones that I want to change, but like, it doesn't tell me. Would this be like, would it be an attribute? Attributes dot property. Oh my god. Dot content, maybe text content. Oh wow, that is JavaScript right there. That's the JavaScript that I'm looking for. Because why make things easy when you can make things difficult? Bravo. And then this causes a problem because I think we're now in a there, right? So because this may or may not actually have something, then you have to do this, right? Like, so it's going to have to be this, right? So it's going to be attributes dot property and tags I dot attributes dot property dot what is it? It's text content, and then we can do attributes dot I feel bad for you, man. Dot text content. So I learned a lot about DOM. I feel really bad for you. It's yeah, I feel super bad for you. Sorry to hear. Okay, where did it go? I think that actually got rid of it. Okay, so now it's just missing. Cool. Oh wait. No, we wanted this content, I think. Content. Yeah, that's what it is. Right? Yeah, okay. There we go. So what we'll do here is we'll make this like so, and then inside of here, because there's two of them, we can just do a case statement. Switch. And then we can do this, since now we'll know that it actually does work. And then we can do this, and here we'll say do, and then we'll also do the other one that we want here. Arc description. And then break. It wants me to do that twice, doesn't it? Oh, right. Case. Wait, can I do it this way then? Right, and then default continue. I guess this would be a break, right? There we go. Beautiful. Give me 2 seconds. I'll be right back. I'm just going to go refill my water. My app, you can now search for movies. Congrats, Jack. So Texas, what were you working on for Netflix? From the Netflix my list. Oh no. I wish Netflix had better search. Well, not better search. I wish that you could search for. You could see the Netflix more like Netflix and stuff like that from outside of Netflix, because I would love to be able to be like, oh hey, is this on Netflix? Without having to like go to Netflix, type it in, and search it. That would be beautiful. To be like, I want to watch this. Which streaming service do I need? Be so nice. I wish Netflix would contribute to that. I've kind of found one for so I kind of found one for the States, where it will like tell you where in the like what service in the States you need, but that doesn't help me since I'm in Canada. A cookie associated with the was set without the same side attribute. Oh, cool. I'll fix that later. Bar charts, yeah, we're going to actually use those. Blocked content. Really unblock this. Warning, each child and a kid. Oh wait, I have a list. I thought I had a key, didn't I? Oh, right, these don't have keys. Key equals I. I know this isn't perfect, but it's good enough since these will never change. Like, these values don't change. I'm also thinking of changing this so it's not exactly this. Like, it's not this anymore. It would be, instead of being a table, it's going to be a chart, I think. I think that's how I want to do it in the long run. So I might change that today. We'll play with it. We'll play with it today. The data's coming along, though. Just have to add all these keys over and over and over again. Key equals I. I should have done this yesterday when I was building this. That probably would have been the smart thing to do, but I forgot. Key equals I. I wish I was better at front end, but I know why I'm not very good at front end, and it makes a lot of sense. It's because I don't enjoy doing it. No! Also, these should be TRs. Oh no, it's TDs, not THs. Oh, cool. I got them all. Oh, that's so much nicer right there. Beautiful. Inspect, console, issue detected, new issue. Indicate whether to send a cookie. Yeah, we'll come back to you. Don't you worry. Console. There we go. Okay. Let's see what it would look like to actually do one of these as a as a thing here. Let's see here. JavaScript merge two arrays. Not concatenate, merge. I think this needs to be like I think this just needs to be like a for loop. Yeah, I'm going with a for loop. I think that's the way that I'm gonna have to do it. Yep. Okay. Const format for chart. And then here we would say data and then years equals, right? And then this would return, because this would need to be a for loop, for I, let I equals 0, I is less than 12, I plus plus, const result equals an empty list. What's it complaining about? Okay. Data. Okay, so this would be result dot push, and then this would be data I and data. Sorry, I got these backwards. Years I, and then data like so, and then return result. Okay, and then here for the first, we're just going to do this for the gross margin for now, right above the table here. So we'll do, what was it? It was chart, bar chart with controller. No, we just want a bar chart, just a bar chart. Here it is. Do we want a bar chart? No. Sorry, I want a line chart. I'm slowly going insane. Line chart here. Yeah, this is what we want. I think this is probably going to result in the best possible situation. This will be year, sorry. And this will be, we're going to do the first one, right? Which is going to be the gross margin. And then this will be format for chart. And it will be the data, the years, and data dot gross margin. What's up, Funky Joe? I think this should fix this up here, and then the H axis was time. Yeah, so that will be year, and then so this will be year, and then this will be gross margin. Right, I need to import charts. Where did I think it's in components. I've got this. Yeah, here it is. Oh yeah, we can do this bigger too. This whole poo. I've been great. Yeah, no, I've definitely been great. But I'm also lucky, so you know, there's that. What was I doing here? Yeah, here. I think that we can get away with this being larger than that. Let's do const years length. Length equals years dot length. Actually, wait, no. No. Actually, no. I like the idea of having this as 12. Because I know that I'll always have 12. Actually, wait, if I do length equals years dot length is greater than 12, return 12, else years dot length. And then this would be years length. 0 to Hero Dev, thanks for the follow, much appreciated. Years length. There we go. And that's just to protect me, just in case I've got one that has a funky length. All right, there. And then we're going to make this wider, right? And we also want to format this into an actual date. New date. Would this just be date? What's the issue here? Wait. JavaScript format date from string. Because like this is a valid string. It's just a matter of the. Yeah, I thought this would work. Yeah. Oh, okay. All right. Yeah. All right. Good. Oh, yeah. Okay. That's a problem. New date. This is not supposed to be a date. Wow. There we go. Much better. Much better. Sweet. And we're not seeing the number that we want there. And I think that's because we've got this here. What we want is to have this be wider. So this would be document.get elements by no. Let's just make this 800 pix maybe. Maybe 900? Sweet. Okay, so with that, we can actually increase the default, right, to maybe 15. Because now we can start getting more and more data points, right? So if we say make this, what if we just don't put a width? That's perfect. That's exactly what we wanted. What if we don't put a height? That's even better. What if we say 20 years? That looks perfect. What do you guys think of that? I like this. I think that this works better than this. Although I don't know, like I think we should have both, and you should just be able to toggle through them. Although like this actually does do a pretty decent job because you can just like look at it and just be like, oh yeah. Huh. I don't know. For this type of data, I'm just not sure if... Like, I like the bar graph, but I also don't. Why 9 out of 8? I think I'm going to scrap that. As much as I like it, I think that having the raw numbers will make it easier to read. Yeah, I think the raw numbers are easier to read. And then let's combine these two together here, right? So we'll do this. Right. Yeah, that's much better. All right. I wanted to, we got nowhere. But we can see these changes, which are nice. They're nice and easy to read. The ones that I'm curious about though, like if we come over to, I think it was Coke, KO. Oh wait, I stood okay. I wanted KO. There. Maybe it was Microsoft. No, I need a smaller company, a smaller cap company, or a company that has gone up in price quite a bit. Ooh, I know. What is it? It's Zoom. Oh wait, no, Zoom IPO'd relatively recently, didn't they? CM. We have 3 years from them. Oh, sorry, 4 years, and we're missing data from a couple of the years. OnlyFans? Does OnlyFans have a stock? No, they don't have they don't have any stock options. You can't execute on them. Yeah, they're not available. They're not publicly traded. Somebody has an OnlyFans that's at Top Stock Club, and it's top growth stock companies. Why is that an OnlyFans? That is kind of amazing, though. That's absolutely hilarious. Look at that debt, though, eh? I guess they paid it all off. This one, we're going to need a couple breaks here. Zoom is great. Oh. Okay. Let's get some more data. Actually, we can start populating some of these. Gross profit is, if it's greater than competition in non-sustainable. Okay, so we want gross margins of greater than 40. 40 or under will be yellow, and then 20 or under will be red. Wait, what happens if we with JavaScript, if we take like 28.3, is that greater than 20? True. Okay. All right. Const get format color equals, and then this will be like so, and then this will do warning. We'll say good, warning, bad, and then value. And then here we'll do if value is greater than good, greater than or equal to good, return, we'll just say green. If value is greater than or equal to warning, return orange. I don't think I spelled that right. My spelling is bad. No, I spelled it right. Wow. Return red. There's some that are less than, right? Type. If type is equal to greater than I'm sure there's a better way to do this, I just can't think of it right now. There. And then we'll do this but reverse. Which means that we want to actually have bad in here now. Bad. Or no. No, we want to keep it the way that it was. We just want to do it differently. Greater than bad. This will be red. Greater than be orange, and then red will return green. And then this will be format price. Sorry, no, format get format color. So here we'll do style get format color margin here, and then this will be, let's take a look at good here. Good will be 40%. Margin will be 20%. I think I got that wrong. Yeah, no. Yeah, I got that wrong. I got that really wrong. Wait, why is this an error now? Oh, right, this. Okay, so I definitely got that. I got this wrong. I'm an idiot. I wanted, I don't need a warning, I need a bad. Yeah. It's greater than bad. There, and this will be good. Yeah, that seems right. Right, I forgot to add a value here, and then the type will be greater than. Beautiful, it works. It works. It's amazing. Let's see here. The SGA, we want it to be less than 30 is good. And then maybe 50? No, 30. Let's say 70 and above. R&D to gross profits. It's not even listed here. I guess in this case we don't really have. Oh no, wait, no. We want this to be as close to 0 as possible. So let's do the same kind of thing here. Let's just say 30 for now. We'll just do the same here. We want this to be as low as possible. Let's actually give this even further down. We want maybe 20% at most. And then we'll say 50%. These are arbitrary numbers right now, though, right? Interest expense. Depreciation. Tend to have lower cost. Oh, god damn it. It's another one where they don't give me hard numbers. They're like not giving me exactly what I'm looking for here. But at least we're getting to the point where this is going well. We're making progress, and that's what really matters. Just gonna do the same here. The lower, the better. Durable. So interest expenses relative to operating income. I don't think we have that number yet. Net earnings to total revenue. Do we have that? I thought that I did have that. Well, the important thing is that we have this, so we can do this. 10-year period, consistency, and upward trend. Avoid erratic earnings pictures. That's really good upward trends in the EPS there. Look at that. It's 1, 2, 4, 6, 9, 8. Went down that 1 year, but 9 from the following year, and then 12 for 2 years in a row. Oof, that's beautiful. In this case, we need to We need to have it start at the first one, and then it needs to grow over time, so it needs to be more of a reduce. Or no, maybe a reduce. It's hard to say on this one. This one's going to be interesting. I guess we'll come back to it. Indigo Kid 5, welcome. Thank you for the follow. Also, just for everybody who's new here, I do post these cross-post them onto YouTube with the same name if you're interested in giving me a follow over there. Or I guess a subscription over on YouTube. How am I going to do, how do I want to do this? So we want to have like over a 10-year period showing consistency and an upwards trend. Oh, sweet. Appreciate it. Yeah, here's my channel, you know. I think that I got the most recent. No, the most recent video is not uploaded yet. Subbed, sweet. I thought that I one sec here. Oh no, I did. Yeah, 16 hours. Oh, it's still private. Weird. I thought that I made it public. Let me just fix that real quickly here, because I thought that I made it public and apparently I did not. All my tags are gone. Of course. I had tags. I spent time on that. It is definitely not that. It is science and technology. There we go. There we go. Now we're cooking with fire. Sweet. Okay. Let's see. I'm not sure how I want to implement this yet. I might implement this one here on the back end for the. We want the net earnings. Let's just go to it here. Close this. So let's see here. Depreciation, we got that to gross profits. What's up, Donut? Welcome back. JavaScript, I hate it. I don't disagree with you, man. I know that you would prefer if it was C sharp, but it's not going to be C sharp. I do TypeScript, but TypeScript causes problems. Where should I invest money to get rich? If you want to invest money and you don't know anything about the stock market, the only correct spot to invest is the S&P 500. It's available everywhere in the world, and you can get it in your own currency. European. Would you be on the German stock exchange, the French, the Switzerland, the European, or the English? I would think the European one, right? Let's assume the European one. No, wait, what? S&P 500. You could if you want. This is what I would suggest for you, though. This is the one that I would suggest to anybody. Anybody who doesn't want to do a deep dive in on specific stocks. Yeah. How many millions will it bring me? Let's see. Okay, initial investment of say $1,000, or let's say $10,000, and it's yearly, and the interest rate is, I think it's 7.5, and it compounds yearly. Here, over a 30-year period. There you go. Oh, the initial investment was $10,000. There you go. So $10,000 with no additional no additional money being put in, and you're looking with a 7.5% return yearly would come out to, over a 30-year period, would come out to $87,000. Turn back in time. By like, you could. I know, right? But this is by far the best way to invest if you don't know what you want to invest in, and you don't want to go through the process of evaluating companies to invest in and like whatnot. The S&P 500 over the 500, right? S&P 500. If we look at it over the max amount of time, right? You'll see that it just always goes up in price. Like, it does have these lulls here where you just, it takes a little bit of time to make your money back. So it took 7 years to make your money back here, and you really didn't make any money back. But if we say invested over the last 20 years, you would have made 131% back. Depending on when you bought in, right? If you bought in at this lull here, right, that's 300%. So, but yeah, no. S&P 500 average return last 20 years. Oh. Over the past 90 years is the S&P. Okay, so the average annual return over the last 90 years is 9.8%. I think we can do the last 10 years. Oh, we'll give us it. Let's see here. Yeah, it changes. Like, damn. Look at that return. 1 year return. But yeah, it averages itself out over a long period of time. So I was even off at 7.5%. It's more like not. It's like it should be really done on 9%. There you go. Yeah. The trick with the stock market is the longer you stay in, the better your returns are. The longer you stay in good companies, the better your returns are. I think, do we have this as a data point yet? What is EPS? Again. No, that's earnings per share, sorry. Net income. Cash to marketable. Net receivables. Goodwill. I'm going to have to go through all of these. Dang it. Should just learn how to evaluate companies or something. Yeah, that's what this aims to do, right? No more JavaScript, only stonks market. So that's what this aims to do, right? So you get a bunch of greens, and then you know that it's probably good, and then you can decide whether or not you want to invest in it. The more green, the better. If you see a bunch of greens everywhere, then it's probably a good company. Give me a couple. I'll be right back. Okay, I'm back. Dark chocolate. Okay. Interest expenses relative to operating income. is a non... Wait. Okay, this was going to be what? Income? Sorry, interest. Interest expense. Oh, I found it and I'm an idiot. Okay, so it's interest expense to operating income. I've got a lot of these. So most depreciation, interest expense to operating income over time. It's there, and I forgot to use it. Interest to format statement dot, and this is a income sheet, income statements, interest expenses to operating income. Yep. Okay, so this one will be another one here. We'll put it directly under here. This will be intro. To expense to and we want this to be tends to have companies with a moat tend to have a lower. So I think yeah, that's going to be about the same there. It's going up every year though, but it's still pretty low. Cash to debt, cash over time. Okay, so these top ones are already good. Net income, right? That's fine. Cash to debt, cash to balance sheet. interest to expense. Wait, didn't I just do that one? Yeah, okay. Wait, is this on here twice? It is. It's on here twice. I just... Is there even a stock that you could have done that with? What would that be? This is a 10,000% return. Oh wait, no. No, that's wrong. This is a 1,000,000% return. So you're looking for a 100,000% return in 10 minutes. Oh, 10 years. I'm trying to think what company you could have put in money for and seen that. I think that it would probably be Tesla. Or Tesla stock. One sec. I think Tesla stock could have done that. No, Tesla stock wouldn't have even done that. Yeah, Tesla wouldn't have done that either. Let's see, so it's... I want to go back to... Tesla would have been close. It's a 10,000% return there. Yeah. Yeah, this would have been realistic. If you put $10,000 in Tesla on day one, you would have gotten your 1 million as of today, as of current selling price. So Tesla is one of them. I think Amazon's another one that you could have done that with. Over a 10-year period. Let's see here. Let's get to the 10-year here. Just do there. No, Amazon's not as good. Yeah, I think only Tesla. Tesla's the only company that I can think of that you could have potentially done it with. But even that, you still wouldn't have gotten this return. It would have been what was it? It was 10,000%. Percent of $1,000. Oh, there you go. You would have made $100,000 off of a $10,000 investment over a 10-year period with Tesla. Anyways. I'm heading out. All right, have a good one, Jack. Earnings to total revenue. Net earnings to total revenue. I thought I also had that one. Let's see here. Net earnings. Net earnings. I did not spell that right. Net income. Okay, so net income. Okay, so we're going to build out the net income to total revenue. Total revenue. Find total revenue from balance sheet. You put sales revenue at the top of total, let's see here. Deferred revenue. That's one, but that's not, I don't think that's what we want. You put sales revenue at the top and then subtract the cost of goods sold, operating expenses, to determine the total operating income. If you have none operating income, losses or expenses, report. There is no line of total revenue on an income statement, aka the profit and loss statement. You put sales revenue at the top and then subtract the cost of goods sold. Okay, so we take the there's no line for total revenue on the income statement, aka the profit and loss statement. You put the sales revenue, yeah, so sales revenue. At the top, and then subtract the cost of goods sold and operating expenses to determine the total operating income. If you have non-operating income, losses, or expenses, report those in the next section. Okay, so would it be maybe on the balance sheet then? The cash flow sheet? Businesses can operate on an actual base of cashes. With cash, you only recognize revenue when you receive money. With an actual, you report income when you earn it, even if you're not paid immediately. Cash flow statement tracks how much money you've been paid or have paid out, even if your company income exceeds. Okay. Revenue. Sales revenue. What line is that going to be? Sales. Oh, shoot. I think it's up here, right? Deferred revenue? No. Total net sales. Total cost of sales. I think that's probably what it is. So this is going to be 206, I think. No. Total cost of sales. Was it 206? Would it be 206? Oh no, that's unrealized. Total net sales. Total. Would it be this one then? I feel like it's this one. It's 260. Nope, not that one. Can't find that one, at least in the API that I have. Interest expense. Wait, I did that one, yeah. Wait, am I down? No, wait. Depreciation, we did that. Net earnings to total revenue. Wait, do I have net earnings? Am I crazy? No, I do have net earnings. Net earnings is net, and then total revenue. Total revenue. Right, that's what I was looking for, total revenue. I'm slowly going insane. Just bear with me here while I go crazy. Total revenues. Apple 2019. So it's 261.7. Okay, so how do I calculate it then? Total revenue. How to calculate total revenue. The better you're able to understand total revenue, the more accurate your calculations will be. Here to do calculate total, determine number of units sold. To determine your total revenue, simply multiply the number of units sold by the average price per good. Interest or dividends should be also be added to determine total revenue. That's not what I was looking for. Total revenue, the first section of an income statement. Total revenue is literally there. Okay, wait. Other revenue, referral revenue. Okay, so if I just find the revenues. So it's this one here, but that's deferred. And this isn't real. Oh. Gross profit minus revenue. Wait, revenue is a thing? Oh, I'm on the balance sheet. That's why it's not working. I'm like, why is this not working? Totally, just don't mind me, you know. I'm just sitting here being an idiot. Net earnings to total revenue. Okay, so net earnings. Net income to total revenue. Net income to total revenue. Did I spell revenue right? Okay. So net income, and then this would be revenue. I should really fix this. Calculate.get percent, and this would be net income to revenue. We're going to call this total revenue. And this will be total as well. And then we can come into here, and where did we put it? We put it right after net income. So we'll just do this here. There we go. And this is going to cause a crash. This is going to cause bad. Oh, mixed test. And we're going to get some errors here because we wanted a percent, which makes sense there. And then we come up and we want to take these here, and then we'll come down like so. There we go. Beautiful. Okay, and now let's add this here to this. Over time. There we go. And then we can copy this and add it to here. And we're going to put it right under interest and expenses. So we'll just copy this here. This is going to be net this will be earnings, income to total revenue. There we go. And we want this to be net earnings history greater than 20% and less than 10. It's beautiful. It just kind of works when we don't have a crash. What's going on here? Oh, right. I've not restarted that. Recompile. Oh, wait. There's an error. Right? Wait. What? Wait. What? Recompile. Net income to total revenue over time is undefined or private. What are you talking about? We literally just added it. It's literally right there. It's literally working right here. What is it going on about? saying that this line is bad. I'm not sure why. But yet it does that fine. What was it? It was net income to total revenue over time. It's still coming back as an error. Did I make it private? No, I did not. Weird. That is super weird. Okay. Oh, wait, that's why. Wait, what? No, that doesn't make any sense. Here we go. There we go. Beautiful. Recompile. Beautiful. Okay, there. Now we've fixed the problem. Oh, much better. It's those bloody spaces that come in every now and then. They just wreak havoc on everything. Okay, so we got all of this. Now it's time to do this. Lots of cash and marketable securities. We've got that. They want 7 years. We've got, I think 12 years is what we've got in ours. No, 10 years. Yeah. Everything is 10 years. That just happened to be what fit best here. Net income, we've got that. Let's move this over here so we can see it better. Okay, so to look for an inventory and net earnings that are on corresponding rise. Inventories that spike up / down are indicative of companies competitive industries prone to booms and bust. So we're looking for net income to inventory. So I think that we've got the net income, right? Yeah. And then we want to put the net income over top of or underneath the inventory, which is grabbed from the balance sheet. Did I already grab inventory though? Like, is that something I'm already sending over? No, it's not. Inventory equals format statement dot. Oh, it is something that I already have. Inventory over time. And then this would be a balance sheet. Speaking of inventory, how about that Tesla stock? It is insane right now still. It is still absolutely insane. Okay, and then this would be so the market cap is calculated based off of the number of units in so let's take, just because I have Apple stock open right now, we can do the Apple stock one, right? So if we take the total number of units, where was it here? Was it stock? No, it was something. Yeah, common stock. Okay, so here, if we take, that's the number of units that. Oh yeah, so that's how it works, right? So if each unit is worth 100, right? That's what you get. Holy. Wow. Thank you for the raid, Secret Player. How was your stream? How dumb is the stock market to value a product company higher than the entire revenue they've made in their entire history? I agree. I'm not disagreeing with you, right? It just comes down to an issue of like the stock market is not logical. The stock market is illogical, and it is mostly the stock market is mostly emotional, right? Wood fireworks, yeah, you've got 102 fireworks, all the fireworks for you. Thank you for the crazy raid, by the way. And how was your stream? But while you type that out, I'm going to finish answering Dan's question here. Was good doing some JS. I'm also doing JS, unfortunately. but yeah, so because the stock market is very is a bunch of Wall Street first time investors investing in dank memes. That's essentially what it comes down to. So like Coca-Cola, right? Coca-Cola really should not fluctuate very heavily, right? It should be pretty plateaued until earnings come out, right? So it shouldn't skyrocket and stuff like that. Apple should not have Apple's a good example here. Like if we look at the last 6 months, right? What has Apple done in this 6 months that states that they should be up 121%? Right? Like what why is there 120% difference between Apple in March, on March 23rd to August 21st, right? That it doesn't make any sense. They have not come out with a new huge product or anything like that in the meantime. Or like this, like here. During this time they had a lawsuit against them. There was a lawsuit against them. So how does this make any sense, right? It's stupid. Money is fake and everything is a lie. That sums it up, man. It sums it up. Actually, that's a good point. The cake is not a lie. All right, I have to run dinner. Have a great stream. Thank you, Raiders. Thank you for the raid, Sika player, and have a good dinner. Hopefully, I'll see you again later. But yeah, no, it boils down to like just silly stuff, right? Okay, so it's net income. We want to see net income, and then we want to have a break, right? And then we want to have a horizontal line. Or no, we want, yeah, no. We want a horizontal line. And then we want format currency. And then in here we want to do what would this be? This would be format currency. What was it again? It was inventory. So this would be data.inventory, and then this would be I as the number. Let's see what this looks like now. This one. There you go. So what did it state that we were looking for here? Inventory. Look for an inventory and net earnings that are on a consistent corresponding rise. Inventory that spikes up / down are indicative of competitive industries prone to booms and bust. Yeah, they kind of rise together, right? By the way, does this make sense to people? Like this one right here? Where the B stands for billion, the M stands for million. I'm gonna have to figure out a way to calculate these both being rising together kind of thing. I'm not sure how I'm gonna do that yet. So, and then this one here, we want to do a HR, and then this would be inventory. Or should we do them on separate ones? No, I want to keep them together so we can color them together. This one would be a great line graph, I think, could go here. This could be a line graph. Maybe a line graph could be better for this number. Okay. Increase in goodwill over number of years, assume because company outbuying companies. We want to increase in goodwill. Okay. So goodwill is interesting. Goodwill's an interesting. I still don't really fully understand goodwill, but you know, goodwill equals format statement dot goodwill over time. And goodwill is one word, not two. Balance sheet. Goodwill. All right, I'm going to need to do this and recompile. Okay, and then we're going to add that to one of these here. So we'll just copy this one and make this goodwill. And then this would be goodwill. And goodwill is a number, not a percent. So we'll do format currency. Off topic, how do you move so fast to the beginning of the line? Is that a keyboard shortcut? Sort of. Wait, was I moving really fast at the beginning of the line? Anyways, it is Shift 6. We'll jump to the beginning of the line. Then Shift 4 will jump to the end of the line. B will go back to B and W will go back and forth between words. Shift A will go to the end of the line and put you in insert mode. V will allow me to start copying from where my cursor currently is. Shift V will start copying lines from the current line where my cursor is. Y will allow me to copy this entire text here and just repaste it with P. Yeah. I can also like highlight this entire line here and just hit D and it will delete it. Yeah. Yeah. I love my Vim. I can't program without Vim. This one confuses me. You're trying them on Visual Studio and it doesn't work. Do you have the Vim mapping installed? No. Okay, that's why it's not working. Sorry. But yeah, Vim for the win. I love Vim so much. Vim, I have Vim here in all of my IDEs. I cannot program without it, literally. So goodwill, the goodwill number here always confuses me, right? So they're saying that we want to have an increasing increase of goodwill, right, over time. And we can see here that Apple was increasing goodwill up until 2016, and then it dropped to 0, right? So how do you lose goodwill? Oh, no worries. It's all good, man. So Coke, how's Coke for goodwill? Yeah, look at that. Coke increasingly just more goodwill over time, constantly. Wow, their goodwill is crazy high. Look at that. Income to revenue, 3%. That's a bad year. How does that even happen with Coke? I like their R&D though. R&D costs 0. Give me a couple here. I'm just gonna be right back. From Investopedia, goodwill is the portion of the purchase price that is higher than the sum of the net fair value of all of the assets purchased in the acquisition and the liabilities assumed in the purchase process. Yes. So I understand that, but what I'm wondering is like, so how did Apple go from having lots, so they had $5.41 billion of goodwill down to zero for 3 years in a row, right? I'm not sure how you lose goodwill, right? Is the part that I'm a bit missing on. And I looked over I read over most of the goodwill one on Investopedia, but I wasn't able to find something that made sense to me, at least. So, but yeah, no, it's interesting. I also find it so fascinating that that's actually the line that you have to submit in your balance sheet to the Canadian and US, like to the government, on your balance sheet. You actually have to put goodwill, and that is something that is tracked. It's so funny and weird. Maybe zero just represents a lack of info, i.e. a null value for now. Well, it's a government document, right? So they would have to track it. It has to be tracked, right? So the value has to be zero. It means that Apple no longer has goodwill as of 2017, 2018, and 2019. There's no goodwill left at Apple. But the question is, why? Is goodwill something that is a yearly thing? Like every year I have, so like, let's say that in 2016, did Apple buy some company and accrue $5.41 billion of goodwill within the context of 2016, right? Or does that number roll over every year, right? Because if it rolls over every year, which is my understanding of it, is that it rolls over every year, then having a zero, the question becomes, how did they lose the $5.41 billion, right? And what could be the cause of the loss of that $5.41 billion? Does that make sense? Or am I just like not making any sense? Because like then you come over to Coke here. So this is Coke, right? And we look at their goodwill, and here you can see that every year it gets higher. Well, they took Fortnite off the Play Store, of course. They have no goodwill. They really want that 30% from Fortnite. I think it's hilarious that they kick Fortnite off the App Store. They kick Epic Games off the App Store and they're going to be revoking all of their licenses, and their stock price goes up. There's a lawsuit right now. Shouldn't their stock price be going down, not up? Like, but the lawsuit's a big deal. If Epic Games wins this lawsuit, it's a big deal, right? Like, it's not a small lawsuit. I think my favorite part about the lawsuit is that Epic is not suing for lost revenue. They're suing for the right to have the ability to choose a different payment provider that is not Apple for in-app purchases, right? So if they have the right to select their own payment processor, that's what they're fighting for, the right to select payment processors and not have to bend to the 30% tax of Apple, but still, you know, maybe like a 15% tax from another person, or 5% from another person, or maybe 2 or 1% depending on who your processor is, right? Anyway, sorry. I'm just rambling at this point. Oh yeah, no, here, look. They went down and then back up. Apple very hard to their developers. Yeah, they can be. So like there's pros and cons to this, right? Like yes, the 30% tax on all things is definitely huge. But they did when they first came into the market, they did drastically reduce the publish dollars, right, to make it easier to publish, and that's where that, and then they just never changed it. Wait, I think that's a dollar figure, not a percent, isn't it? EPS. Yeah, it's a dollar. It's a currency. I should really change this. This doesn't make any sense. Income. I've been copying and pasting them. Goodwill. Look at this margin. Yeah, margin kind of makes sense for this one. Anyways, all right. So what's our next one? So let's take a look here. This makes this is better. Look at that, $11.90 per share. So good. Okay. What was after that one? LT investments, long-term investments. Can have viable assets on book at valuation less than market price, booked at lowest price. Tells us about investment mindset of management. Looking for durable competitive advantage. Like we could, intangible assets. Yeah. All right, so we'll put that one on. This one doesn't seem like a big one here. I don't think that we need this one. Total assets plus return on assets. Higher return, the better, but really high ROA may indicate vulnerability in durability. I think I did this one. This one I think is definitely there. Let's check to see if I've got that one already implemented. I do not, but I think I created it already. I did. I thought I did. Return ROA. I think it was just ROA, right? Yeah. Over time. ROA equals format statement dot return on assets over time, and this is a balance sheet. Oops. Balance sheet and income statement. And this will be ROA. Oops. Recompile. And it feels so good. Okay, Goodwill. We'll put this one underneath Goodwill here. ROA. This is a percent, I think, right? We'll see in a second here. A percent. ROA. Yeah, it's a percent. Margin. So ROA dot to fixed 0, and then this will be plus percent. Can't hear me clearly? Wait, what? Are they low? They shouldn't be. They're not usually low. Let me just do this. Is that better? So it should be a bit louder now. Either that or I don't have my mic pointed at myself correctly here. We can just do this. There is. Yep, when you get close, it's okay. There we go. Okay, ROA. There we go. ROA. Okay, so the ROA, we want what? Higher the better. So we want higher. Higher is better, but we don't have a overall we don't have an overall percent that we're trying to hit. But that's pretty good. Return on investment of 16%, 16%, 13%, 14%, you know, yeah. It's pretty good. Okay, financial institution. Buffett shies from those who are big borrows. We'll come back to this one for short-term debt and whatnot. Need little or no long-term debt. Do I have the long-term? I feel like I've got long-term debt already in the bag here. Equals format statement dot long-term debt. And this will be a balance sheet. And why don't I just do this? We're just going to do this. Balance sheets. We're just going to do this for now. Balance sheets enum.map. And then this would be map.get. And we're going to get the long-term debt. Oh wait, that's a cash flow statement that I'm looking at. Balance sheet, yeah, debt. Short-term, long-term debt. Okay, and then this would be long-term debt. And here we'll do long-term debt. Recompile. Beautiful. Long-term debt. And this is a currency, format currency. Beautiful. Long-term debt. Look at that. No I-18N. I'm not sure how this would be internationalized, to be honest. Because, like, this is specifically Apple. Right? So, like, in this case, the numbers make the most sense to be internationalized to the States. But it actually is internationalized, just as a heads up. So if I go here, it's using the internationalized date formats. But right now, because it's predominantly for the American Stock Exchange and the Canadian Stock Exchange, I'm just defaulting to this. I think we'll change that in the future, though. That way you'll see your commas. This number doesn't make sense to me, though. The long-term debt is not correct. For 2019, it should not be 16.3. It's definitely using the wrong number. And that's correct. Long-term debt. There we go. That's better. Wow, they have $91.8 billion in long-term debt. it would take them multiple, like 2 to 3 years to pay off, I think, if they had to pay it all off starting tomorrow. What's this? Oh, okay. I feel like that's not that much debt. Let's see what Coke has. Sup, NSO? I don't think it's been that long, but it has been a while. Nope, it's been over a year. It was the 6th month of last year. Dang. Yeah, it's so long ago. Damn. Okay, so there's our long-term debt in the billions. By the way, these actually come through as like the full billion number, and it's actually the full number with all the zeros. So I'm truncating it like this, and that's why I'm truncating it that way. Okay, so what's our next number that we want to look at here? Oh, wait, I wanted to see this. So long-term debt on Coke is definitely smaller. Yeah. Huh. Their net income is substantially smaller as well. Total liabilities plus tertiary share adjusted debt to shareholder equity. I am stuck on this one. I'm not actually sure how this works. So, for example, if I go to the balance sheet here and I do share, or is it this one? Share. This one? Share. Oh, no, it's stock. Sorry, not common stock, right? Total shareholder equity. Okay, so I think this is common stock to shareholder equity. Let's do that. Common stock to shareholder equity. If it's less, chances a company has. Okay. So what is this again? It's we're just gonna paste that for now. So this is total liabilities plus tertiary share adjusted debt to shareholder equity ratio. So in this case, the total liabilities and shareholder equity to shareholder equity ratio. Oh God, this is okay. So we'll say okay. So the total shareholder equity would be this number here, right? So this would be that, and then we'd have total liabilities right? And then this would be and then we would do this. And then this would be a plus tertiary share adjusted. So what have you been up to, NSO? Tertiary share, or tertiary stock, also known as tertiary shares, are required stock, refers to previously outstanding stock that is bought back from shareholders by the issuing company. Wait. So what was the number? It was total liabilities. These shares are issued but no longer outstanding, and okay, so I think just common stock would be the number that we're looking for. It's just common stock is what this is, right? Standing stock that has been repurchased. See, this is where things start getting confusing. Total liabilities plus debt. Shareholder debt, maybe? Oh. Understanding tertiary shares. Let's see if we can read more about this. Total liabilities. Carried on the balance sheet as a negative value because it represents a reduction of shareholder equity. Companies with moats have fresh cash, so tertiary shares are hallmarks of durable competitive advantage. So would that be? I'm guessing that would be other total holders equity, which is negative. I think 1,291,000,000. In this case, for Apple, companies with when shares are bought back and held as tertiary stock, it is effectively decreasing the company equity. This increases return on shareholder equity. High return is a sign of competitive advantage. It's good to know if it's generated by financial earnings or exceptional business economics or combination. To see which is which, convert negative values of tertiary shares into positive and add it to shareholder equity. Then divide net earnings by the new shareholder equity. This will give you the return on equity minus effective effects of window dressing. Important presence of tertiary shares and a history of buybacks are good indicators that companies have competitive advantages. I still don't fully understand this. let's take a look at the tertiary stock of, see if we can find that value here. Oh, God damn it. I want to know what it is. The company applies the... Okay, wait. There's got to be another one. There's got to be another name for it. So it shows up in 3 spots, so maybe here. Ah, here we go. 30 million. Cool. Not actually on here. Awesome. Awesome. Okay, so let's do the math here. So this is our tertiary. Or is this only cash flow? Common stock issued. Oh, yeah, no. I think this might be a cash flow thing, maybe? Wait, was I on the cash flow? Huh. Dividends paid. Okay, we can see that. Debt repayment. Net cash used for investment. I think we're going to have to come back to this because I need to actually look into this. All right, we're going to come back to this, and I'm going to call it a day at with a nice, lovely 3-hour stream. Twitch.tv. Let's see if there's anybody to raid. Yeah, we could get CM Griffing a raid. Oh, Codephobia's streaming again. Wait, is he streaming? No, he's definitely not streaming. That's weird. Oh, thank you for the follow, Rollers. Sorry I missed that. Oh yeah, that's better. Here we go. We're gonna give our man CM Griffing a raid. Anyways, thank you to everybody who showed up and was awesome and whatnot and followed and all of that wonderful jazz. And hopefully I'll see you guys again. All right. And ta-ta for now. You too.
And I just made pseudo kid throw up in his mouth a little by saying that right